Ladies and gentlemen, good day and welcome to the Ramco Siemens Limited 3Q FY22 earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Srivastava from Batlivala and Karani Securities India Private Limited. Thank you, and over to you, sir.
Yeah, hello everyone. On behalf of B&K Securities, welcome you all to the 3Q FY22 earnings conference call with the management of the Ramco Cement. We have with us from the management Mr. A.V. Ramakrishnan, CEO, and Mr. S. Vaidyanathan, CFO. I would like to thank the management for giving us the opportunity to host the earnings call. We would start the call with the opening remarks from the management, which will be followed by Q&A. Over to you, sir.
Thank you, Amit. Thank you for all the participants to attend the Ramco Cement Concall after the Q3 results. Okay, this is one of the most results. I don't say this quarter was. We have been hit on both sides. We have been cost-wise is one of the worst quarters because all the cost increase have been hit us very badly this quarter. Also, the prices were very bad in the east. So both sides, both the cost side as well as price and the realization side is one of the bad quarter for us. But definitely things are behind us. The fourth quarter definitely saw we are able to see the cost definitely easing down, and also we are able to see the prices are moving in the right direction. So with that, I'm confident fourth quarter definitely will be a good recovery, and first quarter of next year definitely we'll see a very good quarter from Ramco Cement. With these opening remarks, I leave it to the group for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsh Bora from VT Capital. Please go ahead.
Hello. Yes, thanks for taking my question, sir. So I had the question regarding the pricing and the demand scenario in the Q3 which we have witnessed, especially in the eastern region. So there was a lot of issues. So the sand availability issue was a major concern, and we have seen subdued demand there. So also, we have heard that there was a price hike, the price hike which we have taken there, that was rolled back. So again in the January there was a price hike. So I wanted to know what's the current scenario of both the issues which we had faced earlier and the pricing scenario as well as the demand.
No, demand-wise, definitely January seems to be good demand. Demand-wise, we can't have any complaint. And definitely, but the only problem is that we are not able to get rakes from railways to meet our demand. That is one definitely an issue we are facing. But with our close follow-up and also with multiple grinding units we have in Vizag, Orissa, and Bengal, we are able to meet, and partially we are able to mitigate the problem. As far as the price is concerned, you are right. In the month of November, there was a price increase to meet the cost increase, but that didn't go through. December was really bad, and January definitely the prices are better. The prices have gone up almost by 30 to 40 rupees in Bengal and 20-25 rupees in Orissa. But that happened only after 14th.
Yeah. So, and what's the current scenario in the southern region?
The southern region, Tamil Nadu prices was always good, except North Tamil Nadu, South Tamil Nadu, the prices was always good. So there is no big scope for price increase in the southern part of Tamil Nadu. And Kerala, definitely the prices were lower. The prices gone up in Kerala also. And Andhra, Karnataka also, the price is better. See, everywhere the price is better, but the exact, what extent the prices are, the market is able to absorb the prices, all these things will be knowing. It is too early to know. Definitely will take at least another week to 10 days time. So maybe I will have another conference call, maybe first week of February, to appraise you to what extent the prices have been absorbed in the market.
Okay. Sir, I know the power and fuel cost side, like it was quite elevated if you compare to other companies also. So, how do you see this over Q4?
No, the price, if you see the absolute wise, definitely ours is not elevated. Still, definitely at the same level or lower than whatever we have seen the report so far. But to compare to Ramco cement standard, it might have gone up because, we used to have huge stock of inventory, but this time, unfortunately, I run out of the inventory. I didn't have a big stock normally I used to carry. See, that is the problem. Otherwise, if you see the absolute cost increase, definitely will be lower than the industry. And the month of January, definitely prices started softening. We are able to build up some inventory. Maybe in the month of February, still the prices will come down. That is our estimate. So overall, Q4 definitely will be cheaper than Q3.
Okay, got it. Okay, thanks a lot. I'll join back again in the queue.
Thank you. The next question is from the line of Pinakin from JP Morgan. Please go ahead.
Yeah, thank you very much, sir. Sir, I have two questions. First, just to understand demand trends in both your key markets of East and South India. Now, you mentioned that January has been much better, but it is better compared to December. But if you were to look on a year-on-year basis, given the record quarter that we had seen last year for the industry in March, do you expect the March quarter to have volumes higher on a year-on-year basis, or it should only be better versus Q-on-Q?
See, as far as volume-wise, I want to explain to you a little detail.
Mm-hmm.
See, our main market is Tamil Nadu. Unfortunately, Tamil Nadu, month of October, November was almost washout season. We have extended monsoon. In fact, the monsoon is highest in the last 100 years. So definitely, our Tamil Nadu market was very badly affected in the month of October as well as November. Only December, little bit we are able to increase our volume in. We are able to reach to the normal dispatches into Tamil Nadu. And again, the Kerala also affected by both pandemic as well as extended monsoon. Also part of Karnataka. And the East definitely affected by again extended monsoon because we have two cyclones in the month of October, November. So all these are cumulative factors which was very unusual this quarter. See, in fact, one of the many challenges of logistics we have faced because of cyclone, because of extended rain, cost increase, price decrease. See, all these things cumulative effect of whatever worst can happen that happened during the last quarter. See, definitely you can't see the worst period than the third quarter. Definitely whatever coming quarters will now be definitely much improved than the third quarter.
Sure, sir. So it will be better than the December quarter, but on a year-on-year basis, do you see it to be higher versus last year same quarter?
No, it is too early to say, but definitely we are confident because of new capacity has come up. Definitely we are confident that our fourth quarter should be volume-wise should be better than last year.
Understood.
Sorry, last quarter, third quarter.
Understood. And so you mentioned in your remarks about the power and fuel cost, and you said that this year, last quarter, you did not have inventory. This quarter, you have started with inventory prices were low. But we have again seen a spike up very sharply. Crude has moved higher. Newcastle coal prices have moved higher. So do you see, sir, cost again trending higher through this quarter if oil prices stay at 90 and global coal prices stay where they are?
It may happen. It's too early to say. That is why I don't want to speculate anything. But as of now, whatever the trend we have booked the orders, definitely whatever January, whatever we procured is lower than the November, December prices, and the February, whatever we contact is lower than January prices.
Understood. So just to clarify, what you procured in January will flow through in the Feb or March. So what's the lead and lag generally between the order placement and when it comes to the P&L?
Maybe 40-45 days.
40-45 days. Thank you very much.
Because we don't carry big inventory, so this is why we will hit immediately.
Understood. Thank you very much.
Had I had big inventory, then weighted average cost will be more or less. But this time, since I am not carrying big inventory, whatever procurement cost will hit me soon, within 30 days.
Understood. Understood. Thank you very much.
Thank you. The next question is from the line of Vipul Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. I'm sorry, sir. I'm asking a question on the demand first. The statement looked very contrary to me because it is showing a 15% growth, in the volume terms. As you said, the highest ever range in 100 years in Tamil Nadu. Despite that, we are showing a 15% growth. The question is more towards, on the demand side, because I think we discussed this earlier. Whenever the volume comes, your realization goes down. And when the realization comes, the volume doesn't come. So, and I'm assuming the monsoon, as you rightly said, despite that, the volume has come. So, the question here is, if you can throw some light on the end market, especially towards when we have passed on this quarter, because even in the last quarter, you said my power and fuel cost will increase only 15% for Q3, but it has come sharply up. And I'm assuming you must be knowing the inventory about your company in the previous quarter itself. So can you throw some light first on the end demand side? Because the growth
No, it is true. I have told. I am not denying that, but we never expected such a big spike because it is very unprecedented. And see, these things you can't hold me for one quarter of certain operations. See, the long term, had I made any mistake in my estimates, then you can hold me. No, you told you never achieved this, whatever you told the target. But one operation, you can't hold me responsible for the statement which what I made. This is true for the industry. Had it gone only for Ramco cement, then you can hold, okay, whatever you told is not right and whatever management is not right. You have seen already. You have seen one or two results, and some more results will come coming weeks. Then you can understand what is the cost increase for other companies compared to Ramco cement. That is as far as the cost is concerned. As far as the demand is concerned, yes, definitely you can see the reports. Definitely, whatever monsoon we had is the highest in the last 1 century. If you want, I can tell you the number of reports last 1 week. And you can't compare the overall demand, overall growth with this one. Okay, whatever growth in Tamil Nadu will give different realization than whatever we sell in different parts of the country, because our prime market is Tamil Nadu, Kerala, Karnataka, and also Andhra Pradesh. These parts definitely had a very extended monsoon. We never had a monsoon. Even the month of December, Tamil Nadu never had monsoon. Okay, to that extent, Tamil Nadu definitely have been impacted. We are able to improve the realization wherever it's not profitable, because we have to maintain our dealer network also. But always it is not true. Whenever volume is gone up, the realization is low. Always you can't hold the statement true with respect to Ramco cement. Okay, maybe 1 or 2 quarters, yes. I'm not telling no. But always you can't say whenever volume is gone up. You go through the volume report and tell me which quarter whenever volume has gone up, is it the same trend or the trend is changed? You can go through that and they can let me know.
All right, sir. Sure, we'll discuss that offline. And sir, just last question on the capex side. I remember you said 400 crore is now the pending capex left. But when we see in this quarter, 486 crore is already spent in this quarter. So can you throw some light? How much more to be spent, or is it all done? That's my last question. Thank you, sir.
Vaidyanathan, you can answer this question. See, the balance capex for the approved project is around 1,200 crores, which is to be spent across the 2 years. So because whenever we told you last time, our Aranagar expansion was not included. Now we are taking up Aranagar expansion, which is going to cost around 700 crores.
So for 2022-23 financial year, we expect around 700 crores to be spent on capex, which includes 200 crores of maintenance capex.
Mm-hmm. Very much. Yes, sir. Thank you very much, sir. I'll come back.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. First, congratulations for your first report on sustainability. Pretty comprehensive. Congratulations for that. So my question is pertaining to fuel costing, wherein you indicated that Q4 will be cheaper than Q3. Sir, can you give us a thoughts on what our fuel sourcing strategy is right now? What sort of contracts are we getting into, which gives us actually confidence for Q4, and how should one look at it beyond that from a full fuel sourcing standpoint, sir?
Specific details, I can't give you the contract details. No company will give to this one. But the way you have to believe, see, whenever we say, okay, we are able to source, yes, we are able to source it. But if I say, whenever we are able to source only for January, February, already till February end or even March first week, I sourced. Then beyond that, we are able to source it. Because the question is, availability of the coal is also tight, and the right quality also we have to source it. Whatever I contracted so far is definitely the price lower than November, December. And whatever I received also lower than November, December.
Right. So from an understanding point of view, I just wanted to understand, like, do we get into volume contracts wherein the pricing actually gets indexed to some international index on a monthly basis, and that is how we have to pay? Or we take a call that if I have to incrementally procure for next 2 months, I'll buy it at the current spot. So, sir, how does
both we have?
sourcing...
Both we have. I have certain contracts based on index. I used to buy sequence also based on spot prices. In fact, even last month we are able to get one petcoke as well as $134. I'm right, Vaidyanathan? $134?
$141, sir.
$141. When the prices are around 185 to 195, we are able to procure at $141 also. Because these are all certain cargoes available at a very cheap rate. See, like that, we also source whenever the contract is available very cheap, better than even compared to index, all these things, we buy 1 or 2 shipments also.
But to add something on this cost of petcoke, if you really look at the prices of index, in September it was 168, October it was 228, and November was 195. Whereas in December and January it started coming down. So, which the market should understand, the prices are started falling down as far as the petcoke is concerned, but not sure whether they stay around at what levels. But definitely it is not at the levels at which it was trending in September and October.
Sure, sir. And sir, one last question. Alternative fuel was nearly 21% of the fuel mix. I think the quarter prior to that, it was, I think, if I'm not mistaken, around 28%. Sir, how should one look at this number going forward? And is it something which is a more viable proposition if one looks at it on a rupees per kcal basis as compared to the other fuels?
Yeah, unfortunately, the alternative fuels prices also started going up disproportionately.
And the availability also not steady, sir.
Okay. Sure, sir. I'll join
What
back.
is happening now when there are a number of individual power plants also, independent power plants also in Tamil Nadu. See, they are not able to import coal in bulk. See, whatever alternate fuel, whenever we started sourcing, okay, they come to know about it and they're also jumping on those sources and jack up the price like 100% to 200%.
Sure. That's quite helpful, sir. Thank you so much. Thank you.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
My question pertains to first on the in terms of demand. You said that it was weak and you enumerated the reasons. But how is in terms of your volume growth? How is your ramp up happening in the east market? And in this market, was the realization decline which we see around 6-7% quarter on quarter? it was more because of higher, on a quarter-on-quarter higher sales in the East market?
Yeah, you're right. Highest sales in East quarter. Not only East, also Northeast. You're right.
Okay. And what would be your now revenue or volume mix East and South?
See, normally revenue mix between East and the South will be around 22 to 78%.
Okay, now it's 27 to 28%. Okay.
So this quarter it was more. But normally it is 22 to 78%.
Okay. No, why I'm asking is this because most of your new expansions are targeting the eastern markets, Odisha and the upcoming EP plants. They will be.
I told you in the last quarter there was heavy monsoon in South.
Correct.
We have to move over some to East also.
Okay. So, and one more question in your presentation, that alternative fuel which you mentioned is 20-odd%. What would that comprise, sir?
So various materials. I don't want to name it. There are various materials.
No, I mean, is lignite also part of that? That is why is that number too high?
Yeah,
because
it is part of that. You are right. It is part
okay, of that. Okay. It is because of that. Great, sir. I'll come back in queue. Thank you.
Thank you. The next question is from the line of Indrajit from CLSA. Please go ahead.
Hi, sir. Thank you for the opportunity. A few questions from my side. Can you give us some indication on what was the quarter exit price versus average? How much below was it versus average? Because we have taken some of that.
No, exit prices compared to now. I don't say even first 10 days of January also same. First week 10 days of January, South prices little gone up, because East prices were low. But today, exit prices till today, it is 40 rupees per bag has gone up in the East, in the Bengal. And it may be 15 to 20 rupees has gone up in Odisha.
And compared to
South prices gone up by 15 to 20 rupees. And Kerala it may have gone up by around 30 to 40 rupees.
Okay. But is it fair to say that the current price is above the last quarter's average price?
Yeah, today, yes. Upon today, it will be better than November, December. I have to see the average price I have to calculate, but definitely better than December prices, but it is better than November second half prices also.
Okay, that's helpful. Second, sir, on raw material cost, if I look at your slide, you have 10% YOY increase. And if I refer to the last quarter's presentation, it turns out to be 8% QOQ increase on raw material cost per ton. So is it all because of logistic inwards, or is there any inflation in other cost items as well among raw materials?
Logistics cost, because of the increase in diesel prices, our transportation raw materials also gone up.
Okay, because
our mining cost has gone up, also transportation of raw materials also gone up.
Okay, because on QOQ basis, the same number is not reflected on like freight outward, so that's why I was checking.
No, freight outward is various. There may be some extractive sales. There may be some. We may do more. See, exactly, you can't compare that.
Okay, that makes sense.
But and for the diesel price increase in the raw material cost, there is no per se material cost inflation in the RM cost.
See, the cost of slag or cost of other things have not gone up. Fly ash, they have not gone up. There is things right now expensive.
Yes.
Yes. And sir, last, sorry for harping again on the power and fuel cost. In the slide, you have mentioned the quarter average consumption cost for petcoke at 168, whereas the peak in October was 220. So are we like well comfortable that 168 will not be breached in this quarter, or is it because of the mix that we think that we are past the peak cost?
The cost is basically a moving weighted average cost. Every purchase will have an impact on the consumption value. So the average price was in October was 228, whereas our average consumption is 148 only. So it means there is a partly the inventory base effect was there, and the timing of purchase at what price we buy. These two things will play its part.
Sure. Thank you. That is helpful. That's all from my side.
Mr. Girish, please go ahead with the question. Your line is unmuted.
Thanks for the opportunity, sir. Firstly, if you can share your net debt as of December, and also maybe where can we expect this by the end of this year?
Sorry, I didn't get your question. Sorry. Can you repeat?
Yeah. Can you hear me now, sir?
Yeah.
Yeah. So I was asking about your net debt as of December quarter, and where can we expect this this year end?
Sir, the gross debt will be 3,840 as on December.
Okay.
Cash will be around 80-90 crores.
Mm-hmm.
So you can select from that will be net debt.
Okay.
Then with regard to the borrowing on 31st March could be 3,900 crores or so 100 crores plus maybe possible.
Got it. So secondly, I have a question on the lead distance. We are seeing a sizable increase in lead distance on a sequential basis from around 305 kilometers to 325 kilometers. Any reasons for the same, and what could be a sustainable number going ahead?
See, if you look at the quarter-wise, you cannot infer anything because the various reasons on which the volumes movement will happen between east and south. But what you should look at is 9 months average. You can take it, which is nothing but almost 325 kilometers. That will be the average for going forward for an annual basis.
Okay, got it, sir. Thank you.
Thank you. The next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you for the opportunity. A couple of questions. One on the strategy for East. It looks like given the elevated power and fuel costs and overall cost inflation, so the margins in East would have contracted sharply. Would the strategy for the management would be, given the contraction in margins, if that is sustainable or not is a different question, but would you continue to look at East as a volume market to maintain utilizations, or given the moderations in margin, would there be a change in strategy? And related to that would be, based on the volume mix, it seems like the company is operating at high utilization in East in the GU capacity. In future, would there be a thought on expanding GU capacity in East? So that would be my first question, and I'll ask the second one after that.
No, that is why based on one quarter, we can't say that we are going to have East as our volume market. South is also our volume market. So that is why I told you our percentage will be around 22 to 78%. That we try to maintain that.
And in future also, capacity given, I think you would be operating at very high utilization for GU in East. Would there be a thought on expanding GU capacity also in sometime in future?
Yeah, once we achieve our capacity utilization around 85 to 90%, we try to expand.
Secondly, sir, on the power and on the overall fuel inventory cycle, if I understood correctly, historically Ramco had slightly longer inventory cycle. Given for fuel, given where fuel prices are, would management look at shortening the fuel inventory cycle? Would the cycle be somewhat shorter than your historical trend? Is my second question.
Thank you for giving the credit. Okay, normally we used to have larger inventories, but this time what was happening was not available. I am ready to buy. It was not available at cheaper rates. See, there was a supply constraint also.
Okay.
So that is why we could not carry larger inventory at cheaper prices. Definitely, once the result comes, then you can appreciate still our fuel cost is cheaper than others. Let all the results come, then we'll judge.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi. So just two questions. So first question is on the Karnool clinker. So just to understand, last call you had mentioned that it's almost ready and December is when you're looking for commissioning. So just to understand the reasons for this delay.
The reasons for delay only this pandemic. Now it is maybe February, the first week of February, we are going to commission it. Really, it is almost ready. And because of pandemic, we are not able to see our contractors miserably failed in mobilizing the people, all these things. Now we put our own contractors and we are able to compete up to clinker. So again, cement will be coming only in the month of April.
Sorry, cement will be in April.
Only in the month of April.
Okay, and even the WHRS will come in by then?
No, WHRS will be only by September, October.
Okay. And the Jayantipuram 27 megawatt WHRS, now, has it been fully ramped up in Q3 or in Q4?
3 megawatt is yet to be commissioned.
Okay, so
it will be commissioned another 2 months' time.
Okay, fine. And but in Q4, then more or less 24 megawatts is what is done. So in Q4, to that 24 megawatts, we can expect to operate fully in that sense?
Yeah. We are definitely able to. Also in Tamil Nadu, what we have done, definitely it will not, WHRS in different way we have commissioned, it will not generate the power, but it will reduce your power cost. Tamil Nadu in both RR Nagar we commissioned 2 years back, Arathir also we are commissioning now. They will not give you the extra power, but they will reduce the power cost.
Okay. Could you just explain that a bit, please?
See, what we are doing, the waste heat recovery, one, you can use it for generate extra power, or we can preheat it and so that we can reduce the power fuel consumption at the boiler stage. See, that is thing we are implementing. We spent 45 crores on that, and it is ready. Almost it is ready. By February first week, it will be commissioned.
Okay, understood. And also on price volume equation, there have been a lot of questions on that already. But given that East pricing is weak, I mean this month it has been a bit better, but generally still stays weak. So would you still look to kind of sell, let's say, as much as you can, given that you've already set up capacities, or would you look at the margins and kind of then tone down the volumes in case, let's say, margins are not to your satisfaction?
Well, I told you now that to keep up that 78-22%, we have enough capacity today. So today I don't have any plans to increase the capacity in the East. I mean, Orissa already got approved for the increase in the capacity of 1 more million tons. Said, okay, at the appropriate time, we will do that.
No, I was asking a different question. I was asking, would you look to maximize volumes from the capacities that you have already set up, or let's say in case the margins are not that great?
Already we are operating near to full capacity.
Okay, understood. Got it. Thank you. I'll come back in the queue if I have more.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good evening and thanks for the opportunity. I have some clarification, and I'm sorry if this is already discussed. I joined the call late. Just wanted to understand both price and volume combination in 3Q, what we have reported. Our volume growth is quite strong versus what we were getting feedback from the market, and at the same time, our prices are much weaker than what our dealer checks were suggesting. So, is there been any change in strategy in this quarter, or any one-off kind of an element like a big bulk order or something which has led to this stronger volumes and weaker prices in 3Q?
Oh, I told you, I'm already. Sorry, you're not at that time. See, definitely the mix was little tilted towards the east because the south had a very extended monsoon. See, if I correct that, definitely my volume mix will be whatever we are targeting, and our realization will go up.
Understood. And is it possible to just directionally say, I mean, what could be the difference between a south and east profitability in this quarter or broadly?
No, the realization difference should be almost as high as 1,000 rupees.
Okay, and the cost difference on selling?
Cost may not be much. That's one area. When I take the realization, it is net of this one.
Okay. Okay, thank you, sir, and all the best.
Thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Aditi Agarwal from Millennium Bank. Please go ahead.
Hello, sir. So I wanted to know, once the clinker capacity kicks in after the Kurnool cement clinker capacity is added, so what will be the maximum cement production that our company can make? And so what should be the capacity utilization for a cement company annually?
No, there is a delay in commissioning cement mill. That is why there is a gap between my commissioning of the clinker as well as cement mill. So once my Kurnool plant is commissioned, our capacity will go to 20 million tons.
And so annually, sir, what should be the capacity utilization for the company, sir, on an average?
No, the day depends upon market. No? I don't want to anything with this one. So,
okay,
like you can take industry average as our average.
Okay, thank you, sir.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Thanks for the opportunity. Good evening, sir. First question is, you mentioned capex as, in this PPT 1390 crore for 9 months. What is the targeted capex for FY22? FY23 you said 700 crores.
Maybe another 250 crores in Q4.
Okay, so this compares to when we compare it to notes from last quarter, you said FY22 capex was 1300 crore. So this RR Nagar capex is completely accounting for this. Versus like now we are talking about.
Already we started paying advances and started taking. Partly account.
Okay, and now our debt, which was like last year's 3,000 crore odd, has targeted to move to 3,900 crores. So we had that view of turning net cash or debt neutral, I think by 3 years or something. So that target would also be like sort of changed now, or are we still looking at significant debt reduction over the next 2-3 years?
Debt reduction will happen only after 2 years, not before that, because the RNR expansion we have taken up that I thought of taking up 1 or 2 years later, but because of certain cost advantage I have to take up immediately. That is why that the additional capex is coming. Otherwise, whatever originally we estimated the capex started coming down, or we'll be repaying debt. That might have happened. But RNR expansion I have to take up because of certain cost advantage.
And just to recall, what was this capex allocated to RR Nagar expansion or modification?
Almost 700 crores.
How much?
700 crores.
700 crores. And just one last question on your ad spend and other expense. Did that also increase in this quarter, and what is the target spend for this year? Given we have more focused operations now in East.
Not necessarily I have to spend in the East. We are spending lot of advertisement expenses because we are promoting what is the concept called right cement for right application. So that requires a lot of individual knowledge to the consumers. Okay, what we mean by that, and it is necessary to educate the individual consumer. Okay, why they need different types of cement for different applications. So that requires a lot of advertisements, lot of meets by engineers, lot of meet for the contractors, lot of counter meets. See, most expenses is going up very sharply. Okay, unless if I don't do that, then my concept will fail. Okay, at the same time, we have to see, okay, if this pandemic continued, the continuous meetings may not be possible. Okay, to that extent, my efforts will not fail. So we are balancing it. See, that is also a big dilemma to what extent we should spend. See, if definitely the amount of efforts we are taking, if the pandemic is aggravating, or pandemic continues, okay, to that extent I may be overspending. But if the pandemic is contained, means okay, if my concept picks up, definitely our realization will go up sharply. So these things we have to balance it, and I can't tell that okay, this is the target I have. Depending upon the situation of pandemic, I will decide to what extent I will spend the money.
Okay, sir. Just to follow up on this, my prior question on RR Nagar capex. Our one of the past PPTs or your commentary suggested that we are looking to spend 480 crores in that project. That has seen escalation as well in past quarter, because now we are seeing 700 crores.
Yeah. By the way, you ever given 280 crores? I don't remember.
No, RR Nagar expansion 465 or 470 crores. Then we are
470 crores because we are going for, again, we are also expanding the scope of, again we are expanding scope by modification of some limestone plant.
Okay, sir. I think most of our projects generally sees escalation during the period of the execution, as we have seen.
Not necessary, because normally we see the scope and we increase it. Not exactly we increase in the original scope. Normally we expand about this one also. See, when we see only for the clinker, if we want to take, there's no big escalation. Maybe 40-50 crores might have escalated because of civil cost. But the scope got increased because we are able to tie up with a good technology to upgrade our limestone quality. See, that will increase the life of our mines also. So that is very, very important. See, maybe even 15 years back, many people used to ask me that RR Nagar, there's no limestone, there's no scope for increase. Now we demonstrate to the world what is impossible, we can make it.
Sure, thank you, sir.
Thank you. A reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Sanjay Nandi from Ratnabali Investment Private Limited. Please go ahead.
Yeah, good evening, sir. Sir, can you please guide us with the current...
Sorry for interruption. That 700 crores includes also our dry mix plant. Sorry. It includes another 100 crores for the 2 dry mix plants, one in RR Nagar, another in Salem. Sorry, I not given you the right number. 600 crores is for the project, 100 crores is for the my 2 dry mix plant. Exactly 80 crores, 2 dry mix plants. Sorry, now we go ahead. Sorry.
Okay. Sir, can you just please guide us with the current quarter's clinker utilization for overall South India as well as for eastern part of the country?
So it will be much better than third quarter. That is the only thing I can give guidance. I can't give you the exact, this will be the number. Definitely be much better than third quarter.
But sir, overall South India, if you can tell, that also will help us for the last quarter.
It will be much better than third quarter. That is the only thing I can tell you.
Okay. Okay, sir. Thank you so much. Wish you all the best, sir.
Thank you. The next question is from the line of Gaurav Goyal, an individual investor. Please go ahead.
Sir, good evening, sir. Sir, all the questions you have already answered, sir. One last question is pending, sir. Sir, how much percentage of sale of dry motor and RMC business in our total sale of product of 1541 lakhs, sir?
Vaidyanathan Nayakan.
Pardon, sir?
Vaidyanathan will explain. I give you the number. Yeah. Our CFO will give you the number. Vaidyanathan?
1 minute, sir.
Yes, sir.
It will be around 70-75 crores, not more than that.
Sorry, 70 crores?
Yeah, it should be around.
No, it is around 45 crores, sir, for net revenue for dry mix.
You mean to say, sir, 2.92%?
Yeah.
Approx 2.92%.
Yes.
Okay, sir. That's my question, sir. Thank you, sir, for giving me the opportunity.
Thank you. The next question is from the line of Deepshika Pasari from Millennium Mams. Please go ahead.
Good evening, sir. Thank you for the opportunity. I had a couple of demand-related questions. So the eastern market seems to be growing the fastest, and everyone is flocking in the east for expansion. Please share your outlook and what effect will it have on the industry and prices in the east going forward? This is my first question.
Yeah, whatever happened, the third quarter is separation. People definitely might not have made any money in east, because definitely people just make some return on investment. Definitely the prices will go up further now. Okay. Whatever happened in the third quarter will not be the benchmark for the prices in the east.
And so what about the effect that so much capex is coming in the east? What will this have on the overall industry?
But you also told me that the demand is very good. The government is also bringing both central government as well as state government. They bring a lot of projects. See, the demand-wise, I'm seeing the east will have very robust demand growth.
Sir, also my second question is again related to demand. So with the elections coming up, in your opinion, what would be the scenario for cement consumption and production in the next 2 years?
You asked me absolute numbers of what is the demand in the, what will be the demand?
Just a general idea, sir.
Sorry, I don't have right. Sorry, I don't have right now. Maybe definitely I'll come back to you. I don't have right now.
Right, sir. Thank you.
Thank you. The next question is from the line of Isha from Investec. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, you indicated a capex related to beneficiation plant. Just wanted to understand, is it something which is unique to Ramco Cement given the importance that we lay to limestone? Is it unique to the company? How should one look at this particular capital allocation?
See, definitely we have two beneficiation plant, limestone beneficiation, both Alathur as well as Aranagar. It is definitely peculiar to Ramco, which nobody else has invested. And maybe such problem some of the companies may be facing it. They are tackling by import of limestone. But what we are doing, we are able to get technology how to beneficate the limestone and use it without import of limestone. We ourselves, for example, Aranagar, maybe 10 years back, I used to import 20% of requirement of Aranagar limestone requirement by way of import from Middle East. But now the import is zero. So there are certain companies even today they import limestone to meet the quality requirements, but we are able to beneficate our limestone.
Okay.
That will be peculiar to Tamil Nadu plants.
Okay. Okay. And sir, you also indicated that it will help improve the lease life, basically limestone lease life. Sir, how should one understand this? Can you put some numbers over here, basically what are the lease life is?
Because the low-grade limestone, I'm able to beneficate and use it without wasting it. So the extent our limestone life goes up.
Okay, right. And sir, would it be possible for you to indicate, are there any percentage of our leases which are due for expiry come 2030? I think as per the MMDR amendments, a lot of leases in the country actually will go for expiry. So how should one look at, from a sustainability standpoint, how is Ramco actually positioned?
Oh, we have, no, right now, if you ask me, I don't have ready-made numbers. Okay, what percentage of my limestone expires in 2030, I don't have, maybe next call, definitely I'll give you the answer. I'll be ready with the answer.
Sure, sir. Thank you so much, sir. Very helpful.
Definitely my geological department you have, I don't have right now. I don't have right now.
Sure, sir. Sure, sir. Thank you. Thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Nishan Bagrecha from InCred. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So I think most of the questions have been answered. So I have only one question. Is on Maharashtra. Like you had earlier mentioned that you are looking for the grinding unit. So has it been finalized or?
Yeah, definitely. We want to put up one grinding unit in Karnataka, also one grinding unit in Maharashtra. One grinding unit in Karnataka, almost we are zeroized certain places. We are land purchase is going on. Maybe Maharashtra, we have to locate the right place.
Okay, sir. Yeah. Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and one. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Am I audible?
Yeah, you're audible.
Sir, regarding this expansions you're saying in Maharashtra, grinding expansion, how would that impact your lead distance in terms of your clinker lead? Because you have your clinker facilities in Tamil Nadu and this place, Andhra. So which part of Maharashtra would be, would you be looking at?
Definitely southern part of Maharashtra.
Okay.
Southeast Maharashtra, definitely we are looking at.
Mm-hmm. Okay, so from a Tamil Nadu perspective, you would be servicing it?
It's only from Kurnool plant.
Kurnool plant, okay. Okay.
Tamil Nadu, sir, only Tamil Nadu and Kerala, Karnataka, and South Karnataka.
Mm-hmm. So both these Karnataka and Maharashtra plant would be serviced from the Kurnool plant.
Central Karnataka and even some part of South Karnataka and North Karnataka will be serviced by our Kurnool plant. And also I am planning on the grinding unit in Karnataka.
Okay. And sir, could you again repeat this RR Nagar, what would be the total project cost including the limestone beneficiation that you are thinking about?
The exact cost is around 620 crores for the beneficiation plant and clinker plant.
Okay, because in Q1...
Two dry mix plants we want to put up, one in RR Nagar, also one in Salem.
160 crores, that is...
4 crores each. So together it is 700 crores.
No, because for RR Nagar you had earlier mentioned around Q1 it was 476 crores. So that you are saying is increased.
That does not include limestone beneficiation.
Correct. Beneficiation is what is included in that, right?
Yeah, that is included now.
Okay.
These things are technology are fast growing.
Mm-hmm.
We are able to get technology and reduce the cost. Today, I don't mind incurring certain capital costs, but if to the extent if I'm more than that, if I'm able to reduce the variable cost, and also I may extend my life of the mine, then definitely we don't mind spending that money.
Okay. And sir, one last question. You mentioned earlier during the call that your profit difference or net realization difference between East and South is around 500. Is that understanding right?
No, 1,000 rupees.
1,000 rupees, okay. Oh. Why I'm asking this is because you would be incrementally selling more in the eastern market. So how would that?
No. I told you now my percentage will be 22.78. More than once I repeated, it will be 22.
Okay. So it will remain at those levels. So you will be concurrently, increasing your sales mix in south also.
Yeah.
Okay. Great, sir. Thank you. All the best.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. Just could you shed some light on the trade non-trade split between South and East, like the difference between both the markets for you?
So in South, our trade mix will be around 80%, non-trade will be around 20%. Again, depends upon state like Kerala, where we have almost 95% trade, only 5% non-trade. So maybe Karnataka and Tamil Nadu will be now previously it is 90-10, now it is increased to 20%. This one. East will be around 40-45% non-trade and 50% will be trade.
Okay. And also, like for you in East, what will be the trade non-trade price gap generally, just to understand?
There's no price gap.
No, the trade and non-trade pricing.
Some non-trade I'm getting better realizations than trade.
Oh, okay. Thank you. That's all.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Amit Srivastava for closing comments.
Yeah, thank you. Thank you very much, sir, for your valuable inputs. And that concludes this conference call for today. Thank you, participants, for joining us.
Thank you for all the participants and also to BNK team. Thank you.
Yeah, thank you.
Thank you. Thank you.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.